So is it possible to get tax-free 401k distributions? Yes and no. It's kind of a tricky subject, but we're just going to go over a few things I figured out and found on some websites today. Kind of interesting information. They make it sound like you can take a withdrawal tax-free, and there are some ways to get that done, but you're ultimately going to pay taxes on your 401k distributions when the time comes. So here's some of the loophole things I found. Now, first of all, 401ks are considered tax advantaged investments, which means you basically get a better tax rate at the time you take the withdrawal, because they base it on the taxes of the year that you take the distribution. So if you take the money out on a year where you're making $100,000, you're going to pay taxes when you add in that 401k money based on the $100,000 and let's say $20,000. But if you take out that same $20,000 when you only make $40,000, you're only going to have to pay taxes on $60,000 as far as total income goes. So that does come up, and it is part of the process. But here's some of the tricky spots. Apparently, you can do a rollover into a new 401k from one employer to another employer. And during that time frame, you basically have access to that 401k money. Now, if you take some of that money and keep it, then it'll get added as income, and so you're still taking taxes off of it. But it depends on how much you keep and how long you keep it for. Not so much time-wise, but how much you take and the year that you take it, and how much it adds to your income. So you're not really getting it tax-free, but it is kind of a loophole. Part of that too is if you roll it to an IRA, you've got 60 days to put that money into the IRA. So basically you can use that money for free for 60 days, but whatever's not actually put into the IRA at the end of the 60-day period will be added. You have to declare it on your taxes and declare that you rolled it over. Whatever you didn't roll, you will have to pay a tax on. So yeah, you're not paying taxes when you take the money out, but you're paying taxes if you keep the money out. So see what I mean? It's kind of a sticky subject, and of course leave it to the IRA and the IRS to make things hard and difficult for everybody to use. Sorry if the wind's a little much here. I'm trying to get some outside videos done here and there. Anyway, so when it comes to the rollovers, it's not treated as income because you're rolling it over, and unless you don't put it back into the rollover that you take it from. All right. So here's the other loophole. You can borrow your 401k money, and it's based on the 401k program you have. It's not an IRS mandatory thing where 401ks have to allow you to borrow your money, but that is a way that you can do it and get the money in your pocket without paying any kind of penalties or fees for it. And you can do that at any age if you have money in there. Typically, there's limitations. The 401k program we use is through Fidelity. Our program is set up, you can have one loan for up to 50% of your vested amount of money that's in there. You can't take the company's money out if you have 401k match, but you can take your own money and up to 50% of what's in there with a maximum of X amount of dollars. There are also ways that you can get that money out without paying penalty if you have a hardship situation, and you have to justify that to the IRS at the time. But divorce, medical emergencies, housing emergencies, those kinds of things can be classified as hardship cases where you would take withdrawals, and you can take the money without penalty. Now, I know a lot of people that have used the loan program for years on and off because typically the rates are a lot better than what you'll find at a typical bank. So especially right now with the economy the way it is, bank rates are going up on everything, including cars and new cars, used cars, whatever. And when you borrow from your 401k, they don't ask you any questions. They just say, what term do you want? Here's the percentage of interest, and then you just make weekly payments back automatically, typically from your check. So I know people that have used that as a way to pay for cars, pay for college. One of the ladies that I work with paid for her kids' college basically yearly. She took out the amount it was needed to pay the year, so it was freshman year of college. She took that from her 401k, borrowed it, and then set it up to pay it all back within the year, so that the next year she would take it out again and do it again. And that way she never paid extra on it, and she didn't have to finance it otherwise. She just used her 401k financial number. So it saved her a lot of money in the long run, and ended up her kid graduated debt free, and she was basically debt free by the end of it as well. Kind of tough to do if you have other responsibilities, but financially, because it's hard to pay back, let's say $20,000 in a year. But if you're in a financial situation where you can do that, it's not a bad plan to think about. Anyway, I don't really suggest using some of these loopholes that people try to find and use. It's not a real advantage to you. The advantage really is, don't use your 401k money, even when you're at a non-penalty point. Don't use it until you need it, and make sure you need it. And typically that would be maybe when you're having a low income year, and taking it when you're actually in retirement, because then you're going to be making less money. For instance, if you retire in July and you've already made $50,000, and then you start taking 401k distributions as well, that's going to increase your tax burden for that year by whatever you take out. But if you start taking that money out in, let's say, January, of course you haven't earned a lot of money yet, so your tax burden is going to be less. So doing it when you're in full retirement year is probably the best way to go if you're going to do it at all that way. Otherwise, I would say hang on to that money until you have to take it out, and then take it in increments that you can keep your tax burden more affordable. Anyway, not an easy thing to work with. 401k information changes depending on who you talk to and who your advisors are. Definitely get your advisors to get some information to help you out, especially if you want to use IRAs. I'm not real educated on them, so seek out the proper information. Anyway, thanks for watching. Talk to you later.